Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Country Garden Services Holdings Company Limited Annual Report. Country Garden Services Holdings Company Limited provides a wide range of businesses and services to property owners, residents, and developers in mainland China. The company operates through four main segments: property management and related services, three supplies and property management businesses, city services business, and commercial operational services business. The company offers various property management services including security, cleaning, green landscaping, gardening, repair and maintenance, and other services for residential and commercial properties such as office buildings, industrial parks, and government buildings. In addition to these services, the company also provides community value-added services like home living, decoration, real estate brokerage, community media, local life, and insurance brokerage services. Country Garden Services Holdings Company Limited also offers management consultancy services to property developers for pre-sale activities and consultancy services for properties managed by other companies. The company provides cleaning, green landscaping, repair, and maintenance services at the pre-delivery stage. Furthermore, it offers sales and leasing agency services of unsold parking spaces and properties, heat supply, city and commercial operational services. The company's services also include elevator products installation, supporting, and other services, as well as information system integration, skill training, science and technology promotion and application, advertising, and e-commerce services. With its extensive range of businesses and services, Country Garden Services Holdings Company Limited has established itself as a leading provider in the property management industry in mainland China. Country Garden Services Holdings Company Limited market capitalization of 19 billion is significantly larger than the average industry peer of roughly 1 billion. This shows that Country Garden Services Holdings Company Limited holds a significant advantage in their industry. Country Garden Services Holdings Company Limited trades at a higher price-to-earnings ratio of 30 times and a lower price-to-book ratio of 0.48 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 45% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 2.53%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. While the company is able to service its interest expenses from operating income, the presence of recurring special charges raises concerns about underlying earnings quality. Investors should monitor whether these charges reflect ongoing operational inefficiencies. The primary drivers of revenue growth or decline can be identified through a review of the key statistics provided. On the growth side, several business segments have shown significant increases in revenue. The three supplies and property management business has seen a substantial jump from RMB 8.16 billion to RMB 11.27 billion, driven by a combination of factors including market expansion in high-density core cities and new annualized revenue from added projects. Community value-added services have also experienced growth, with an increase of RMB 208 million, while property management and related services business has shown an 11.2% year-over-year growth in revenue from contracts with customers. Additionally, local living services have seen a notable increase of 19% year-on-year. On the decline side, environmental business revenue has decreased by RMB 686 million, while value-added services to non-property owners have experienced a decline of RMB 75 million. Commercial property management business has also seen a decline in revenue from contracts with customers, down 3.4% year-over-year. The mixed or unclear category highlights various factors that may impact revenue growth or decline, including changes in cost of sales and general and administrative expenses, as well as external factors such as economic conditions, government policies, and real estate market fluctuations. The company's ability to generate positive operating cash flow has been inconsistent over the years. According to the financial statements, in 2025, the net cash generated from operating activities was a negative -0.3, indicating a significant shortfall in operating cash flow. This is further supported by the operating cash flow figure of RMB -502.9 million, which suggests that the company has been struggling to generate sufficient cash from its core operations. However, there appears to be an inconsistency in the data, as page 48 reports a positive operating cash flow of RMB 507.9 million. This discrepancy raises questions about the accuracy and reliability of the financial statements. Nevertheless, the majority of the evidence suggests that the company has not been consistently generating positive operating cash flow, which is a crucial indicator of its financial health and sustainability. The company's debt level has undergone significant changes. Non-current bank and other borrowings have seen a substantial increase of 139%, while total liabilities have risen by a relatively modest 4.08%. Bank and other borrowings have also experienced a notable surge of 87%. However, it is worth noting that secured borrowings have decreased despite the overall increase in bank and other borrowings. In terms of interest expenses, there are mixed signals. Interest on lease liabilities has decreased by RMB 7340, indicating some cost savings. On the other hand, interest on bank and other borrowings has increased by RMB 24,945, suggesting that the company is paying more in interest payments. Overall, while the company's debt level has changed significantly, the impact of these changes on interest expenses is not entirely clear-cut. The company's performance can be analyzed through its various segments. On the positive side, property management services saw a significant increase of +7.3%. The three supplies and property management business also performed well, generating RMB 8,156,680 in revenue. Additionally, the commercial property management business brought in RMB 4,047,078. However, some segments struggled to keep pace with expectations. The environmental services business experienced a decline in revenues, as indicated by a negative result of RMB 172,305 on page 12 and further decline in revenues on page 40. Similarly, the commercial operational services segment saw a decrease in revenues. Management's outlook and strategy. The company's property management and related services business is a significant contributor to revenue. To enhance long-term competitiveness, management is proactively adjusting its business layout by transforming the retail business towards essential products. In addition, management is increasing investment in integrated marketing for the media business. This indicates that the company is shifting focus towards more strategic areas of growth. Furthermore, management has agreed to provide revolving loan facilities to entities directly wholly owned by Ms. Yang Huiyan, which may suggest a strategy to support related parties or increase liquidity. Management is also prioritizing employee development through regular learning programs and online courses, with the aim of developing core management cadres. This investment in human capital will likely have long-term benefits for the company's competitiveness and growth prospects. Overall, these initiatives demonstrate management's commitment to driving business transformation and enhancing competitiveness. The company has a history of paying dividends to its shareholders. The total amount paid out was RMB 1,511.4 million. This payout consisted of both final and special dividends. On page 18, it is mentioned that the final dividend was RMB 13.52 cents per share, and the special dividend was RMB 16.09 cents per share. Similarly, on page 60, the company paid out a final dividend of RMB 4.62 cents per share and a special dividend of RMB 41.8 cents per share. The clear indication is that the company has indeed paid dividends to its shareholders. That concludes the financial summary for Country Garden Services Holdings Company Limited. Feel free to comment below and I will be happy to answer them when possible.